The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And what a day it is, W. Hang on a second. I forgot something and I put it up here just before I forget it. It's always that way. So what do we have going on here today? Well, another wonderful day on the Power Trading Hour. With me, your humble, lovable, squeezably soft host. Once more into the breach to dear friends.
The following takes place between 2 p.m. and 3 p.m.
Every day. So as we start this day off, it's no big deal so far. We're off 6 points. One big thing is we're about 300 million shares above the volume that we had yesterday at this time. A lot of stinkers out here, a couple of winners. We'll talk about all of them. But I don't know what you can say out here. We had the day that we should have had yesterday, which is the up day for options rollover. Then normally they push the market down on a day like this. I don't think that there's much pushing out here, though. I think we're down from pretty good reasons in earnings, and we'll talk about that. And, of course, Wednesday we actually break away and get a good indication where the market really wants to go. So we've got a little bit longer to go, but so far we're following the pattern to a T to options rollover. And we will continue that, and normally into the close today. Sometimes it's over by 2 o'clock today. I'm seeing a lot of volume, so I would lean a little bit more that we may see a general change in direction in the market, or at least the next trend to fire up for the next few days. Maybe before the end of the day, but certainly by tomorrow at this time, we're probably going to have a much better look at it. And, 2.36 billion shares as we start to show on the New York Consolidated Tape kind of tells you where the interest is on the downside. We've had downsides with a lot of volume. We've had muted upsides. They haven't been disastrously low since we made the highs back up there at 21.70, 8. But, we're off a little bit. Now, one of the things we'll talk about, and we'll show the chart, is just how locked in everybody is on Wall Street to a market going nowhere. So we'll get into that today. And, of course, let's get this party started.
That it's all just a little bit of history repeating.
On this day in 2000, AT&T announces it will break itself up into 4 separate businesses: broadband, wireless, business services, and consumer services. After years of slowing growth, the floundering behemoth — you don't get to say behemoth that many times, do you, in a day? It's my word. It's the word of the day. It's finally conceding that all things to all people strategy is a failure. It's reality, the end of an icon, says analyst Ken McGee. And no matter how they try to put a positive spin on it, it's the death of a corporate giant on this day in 2000. So it was written, so it would be done. Got a lot of other stuff going on. Very occasionally, we see random acts of journalism. And, of course, random acts of actual journalism and finance, even rarer. We've got some clips that I want to play because it's maybe the most important stuff that I've found. And there's not a great deal of it around. There's a lot of what's going to happen in the next 30 minutes or an hour of the day. Even me, I kind of talk about maybe the next couple weeks or a month, kind of on the long range. But there's that kind of macro thing where people talk about things that are way out. But one of the best things that I had — now, where's that at? Oh, there it is. Is that it? Yeah, there it is. Was a interview from, it should be Raul. I got it spelled wrong here. Raul Paul, who is a guy that has worked in macro environments forever. But he had, I'll go ahead and play it. I've got it up as a slide too. But he had kind of a rule that he talks about in his macro courses.
No, and I always have an expression which is suppressed volatility leads to hypervolatility.
Right.
And it happens in populations, it happens in all sorts of things. Once you suppress things this much, now whether it's central banks or whatever, suppressing it, the moment the kind of the lid's taken out, the genie comes out of the bottle, the volatility explodes.
Right.
And he's got a great interview. It's been a while since I found any kind of sign of intelligent life out in financial infotainment, but a couple of things in the last couple of days. I only have a couple of people that I really pay any attention to other than taking the opposite side, assuming that they're lying to me, as 90% of the weasels and skunks that we find on CNBC, sometimes they're just stupid. Maybe they don't know what they're doing. Sometimes they're outright lying. And, you know, maybe 1 out of 10 people actually has something to say. But a good interview. Probably the most important thing. For some reason, the audio was so poor, I didn't borrow getting it, try to cut it up here and play. But I've always wondered what the implied short position on the dollar is. And he had a number, and it's $10 trillion. That is, if everybody had to carry basically cover what are implicit short covering on the dollar, it would be $10 trillion short on the dollar. So as the dollar goes up, not only do goods and services change the bottom line of companies in America, but we've got a ton of folks out there that could all have a short squeeze around the world as the dollar goes higher and cause some of the things that have happened in the past when everybody's in the exact same boat. There's no way to hedge it. Anyway, pretty good thing. He's not very far off from where my opinion is, and that is we're already in a recession. It may be one of the mildest recessions that we've had so far, and we haven't gone that far down the road. I don't know how deep it's going to get with the Fed molesting the economy on a daily basis, and the dollar, and the treasuries, and everything else they can molest. But when that genie comes out of the bottle, I think the retirement trade of the year is going to be watching a VIX go from 12 or 13 to 60 or 80. And we'll look for that. I don't know when that's going to happen, but my guess would be in the next year. But good stuff. If you ever check him out, he has a deal where you pay lots and lots of money to watch very big people on Wall Street talk about what they do. And not a lot of that actually applies to us individual traders. You know, even if you had $10 or $20 million, I can't imagine that much he has to say would apply to you. But still interesting nonetheless. We'll be back with an indictment of Alibaba.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what else do we have going on here? Andy Hecht later today is giving me some tips on the show today. But what else do we have going on? Like I said, Raoul Pal was not the only one out here with some words of wisdom. I have talked about the problem with investing in Chinese equities till I'm blue in the face. Not blue in the face right now. But one of the reasons is, of course, you can't and don't have any access to the books. Jim Chanos was out talking about his Alibaba short. And for people that are big hedge funds that short things like Citron and some of the others, they're pretty much hyperbolic in their stuff. Chanos is very measured. He comes out and says, I've got this case, and if the case changes, I'll cover my short. I'm not bounding the table here. I'm just saying a few of these things, and you're more than willing to disagree with me. But it's not kind of the David Einhorn thing with Carl Icahn, where where he gets all in on a position. But it's everything in a nutshell that's wrong with Chinese stocks. He had about a 6-minute deal on it. I'm going to just cut it down to about a minute in 3 different segments. But when he's talking about, where are we at here? He's talking about Alibaba and why he's short. And I'll play a couple of these here, and then we'll talk about it.
I said, you don't see the entire operation of Alibaba. You don't see the actual fulfillment part, even though that's what they do. And Mr. Tsai said, well, yeah, that's 2 million people that work in delivery and warehouses and et cetera. Well, we're a tech company. Why would we want to put them on our books? To my point. Exactly. Why would you want to put them? I'd love to put my employees in some unconsolidated affiliate so I wouldn't have to show their salaries.
So our books books if you don't actually put down all of your expenses? Well, yeah, especially if you're in China, you won't get away with it here in the United States. There is kind of a half version in the United States called non-GAAP earnings. And people say, well, it doesn't directly show the true earnings potential of my company. And, if I can write down anything I want in the books and calling an asset, I can make my books look like anything. But this is a war between him and a couple of the folks at Alibaba, where he's just saying, you guys are going through $20 billion a year. And guess how much money Amazon has gone through in the last 17 years? 20 billion. Yet Alibaba is going through that in a year. They are burning cash like nobody's business.
Ask the people at Yahoo what the corporate governance at Alibaba's like. They woke up one day and found out that Ant Financial Alipay was taken from them, quite literally taken from them. Everybody forgets that. And Alibaba said it was because of regulatory reasons. We have to own it entirely. But that didn't really help the Yahoo shareholders, who suddenly realized that something of great value was not theirs anymore.
Could Microsoft just give away Office, everything that they do on the business side of software, and just say, sorry, shareholders, tough luck. New regulations say we had to. Well, there weren't any new regulations in China that said they just literally stole it. And lastly,
we also have a company that has a market cap that was basically the equal of Amazon's in January. So when people tell me, well, this will be the next Amazon, I always say it already has been, basically. I mean, it's already at a $280 billion total enterprise value.
So a pretty good takedown. I have said that he is one of my heroes. Don't agree anything with him politically. But in finance, he is one of these folks that does not really pontificate beyond the scope of what he can prove and literally prove in court. This is not one of the high-flying stocks that someone's shorting and trying to make some quick money by hopefully blowing a bunch of people out. But good interview today. If you catch it, best not to watch the stuff I fast forward through as much as I can. But he talks about a few of his other shorts with Tesla and Valiant, and gives a pretty good case for both of those being lower over time. But of course, he has a much bigger time frame than us. He's looking a year and a half down the line when the proverbial bovine excrement hits the spinning wind-producing device. And what did he have to sit on Enron for a year? He sat on Enron for about a year and a half. And then, of course, I guess maybe what I'm trying to get at is that people like him and a few of the others that short these stocks are the equivalent of the story where supposedly the actor who had only been working for 15 years in summer stock and doing everything else gets discovered and is suddenly a star overnight. Well, he wasn't a star overnight, and the doctor that operated on your heart, he probably spent 15 years to get to that point. But these guys, they've got to have a much longer time frame for us. But what they do point out is where the most risky stocks are. They do not stick a couple of $1 billion short in a company just because they kind of feel like doing it. So if you're thinking about buying Alibaba, I say the same thing I say about all Chinese stocks. Since you don't have any books that are worth anything, how can you ever evaluate the company itself? Why not just be in other companies? I mean, you can be in companies in England and their books are right, or even Europe and know the books are mostly right, or in the United States and know that the books are mostly right. Every book is a little bit roasted, if not totally burnt. But why in China, where they can just take something away from you in a single instant, and there's literally nothing you can do. I don't understand it. Anyway, other things going on out here. Oh, last thing. We were talking about being in a recession already. We just saw the new Obamacare price hikes over the last day, and the average is going to be about 25% for that. If we're looking at a consumer economy and trying to figure out how that affects everybody going forward next year, that's going to be a pretty big cut out of the economy. We need about 3% or 3.5% growth to equal that out on GDP. We are not going to have that. They're looking at what, 1.5% forecast for 2017 now. So, any big hike in fuel costs, these costs will be fixed for everybody next year. That's kind of hard to say and give a bullish outlook on a macro scale for the next year, no matter who becomes president. Who, I said. And I'm not an owl. Give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I have my first thing. Yes, the question was the $20 billion on Amazon, which is what they had to begin with in 2000. They've been cash flow positive for whatever, 17, 16 years. And that's been pretty much it. So why I am bearish on Amazon right now. Let's take a quick look at that on the charts. I don't see, we had kind of a little bounce out of here, but I still think we're just on the cusp of coming back down to the $650 level, and it's going to be based on earnings when they start telling people how much money they're spending on airplanes. Just my thought. But nice bounce out of that bottom a couple of days ago, but a lot of people, especially big people on the street, are short Amazon. I'm assuming that they are looking at the same thing that I'm looking at. Now, we're going to go to the winners and losers here today. Do I have that? Let's go to that. There we go. Okay. And see what we've got for today. AK Steel, it's up 14 cents, no big deal. BHI, we'll take a quick look at. Nice spike higher. Unfortunately, it's not able to hold that December 2nd spike of 55.24. That had 4.8 million shares. It had 8.4 million shares today with a spike, but still problematic. We'll go back here a little bit farther. It's back into this October 7th, 57.80 or 57.40. We can't, 3 cents short that one. And, of course, through the December 2nd high on that. But this is where you have the supply line coming in off that May 5th, 2015 high in Baker Hughes. But a nice spike. A lot of people short these individual stocks going in earnings. Most of them have been burnt on it. Buffalo Wild Wings, BWLD, down 420. If can't hardly turn the news on without seeing that the NFL viewership is down dramatically, somewhere between 10 and 15%. A lot of people arguing over the cause, whether it's people kneeling for the Pledge of Allegiance or too many games. I don't know, but it's down, and any of these places that depend on lots of sports presentations going to be kind of tough for them. Not a lot of volume so far, but I certainly think that this 122.25 level on Buffalo Wild Wings is doable. It may be after the first of the year, maybe even into springtime, but I think this could break the 122 and go to 100. Continue to, they just charge way too much for what they have. It lasted for a while, but I think people are finding other places to go. When you can get a nice steak for the price of 10 wings, I just don't understand wings. They used to be cheap, probably one of the things. CIT Group was out today with earnings news. Open lower, kind of moved a little higher. Not a big deal out here. It's still kind of in this long trend line, but getting kind of close to breaking the downside on it. But I don't see a lot that you can make out of that one today. CLVS. To Clovis Oncology, this thing had been kind of working on an ABC on the way down. I think we're getting confirmation of that today. At least a retest of this October 7th low that had monster volume of 19 million shares is setting up. And I don't know what else you can say about that, but yeah, 25 bucks and a little change out here looks like a good chance that that gets retested. Of course, the sector of the day that gets the losing horn for everyone out here is anything to do with housing or building. Home Depot, Lowe's, a couple others we're going to take a look at getting smacked around a little bit. down and volume picking up on Home Depot. It's got 6 million shares going into the 7.3 million share low of June 27th, 122.99. Probably going to get there in the next day or so. So take a look at it. There's a nice gap from 120 to about 122.50, and my guess is that we're probably going to get back into that. Energy has been significantly stronger off the August 2nd high, if we want to look back to that June 27th low. And I don't know if there's anything else you can say about it. HD is taking lows with it. It's off, 3% also. A similar setup out here. This one has a gap at 65. That would be probably the place to look for any kind of support. This had already gapped down on huge energy back on the 17th of August, 19.1 million shares. That set the move back up to this gap and the last previous low at 64.34 on February 24th. Nothing new in this. Still in that sector, the water heater companies, which is Waters Corporation, pretty horrifically bad news in it today. This is all telling you a kind of a big slowdown in new housing and replacements for things like water heaters over the last few months. They kind of said, ironically, that the valve has been turned off, the spigot. Anyway, down on pretty monstrous volume of 2.5 million shares for Waters Corporation. And, of course, there was the other one out here was Whirlpool, WHR. But all these kind of the same kind of thing out here. Whirlpool literally blowing through and with monster volume, already more than double the June 27th low at 151.37, 1.8 million shares. They have 4.4 million shares and went $3 below that. We might try to get a little bit of support in this level. Gaps come back in on this one at 141.50. My guess is that that's where this thing is going to head now that it has broken its previous low. What else do we have out here? Sonic, is it the biggest loser of the day? The Biggest Loser. I never watched that show. Maybe they've got some good jingles I can take from them and get The Biggest Loser. Sonic. Well, summer's over. Roller skating's gone the way of the dodo for this winter, but it's blown through its $22.38 low of September 30th, 2018 that had 1.7 million shares with a paltry 8.9 million shares today. So I'm going to say that this is blown away its previous lows. If you're starting to get a theme out here, you're getting with it. When we come back, we'll look at 3M, Minnesota Mining and Machinery. What is it? Minnesota Mining and something. I'll think about it. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're looking at 3M. It's down significant volume. Going back into probably the easiest thing to look at is the 27th of June that had 2.5 million shares. And, of course, the 19th day that had 1.7 million shares. Both of those kind of getting into those candles right now. 2.8 million shares already on the day. But looks to me like this is going to make a beeline now back down to the 155, 156 area, which is the next major gap down below. And had a few emails out here. First one is Wayne from Dallas. Thank God he's not from Lutz. Is asking me about Baidu. I don't see anything out here that would tell me one way or the other which way Baidu is moving. I would, this thing's going to go to 197 if you got good earnings, and it's going to 157 if you got bad earnings. The thing is that this thing is right in the middle of no man's land, getting a little bit of downside today. But I just don't know what else you can say about it. This thing's stuck around that 175 to 180 level, and I don't think that there's any way to get any good feeling. I don't see anything in the chart anyway. Again, my warning for all stocks in China persists. Dave, Dan in Clearwater said, current thoughts on the U.S. dollar. Any change? Still expecting to push higher? Yeah, I think it's going over $100 until we get that test, which the Fed probably going to be all over. So it may take a couple of times to get through. But I think more. I thought about it for an hour after he said $10 trillion, Raoul Paul, that I was talking about earlier. And I'm thinking, the one thing that we really don't know is just how many people have borrowed stuff that have to buy dollars back to pay it off, especially as the dollar goes up. Is that a self-fulfilling thing? Could we see a run to 130 in a matter of a couple of months if everybody else goes to hell in a handbasket? If we saw the Russians and the Chinese and maybe the Taiwanese and the Filipinos and everybody get in a big Donnybrook over there, maybe going up against the Russians. Everybody's over there spoiling for a fight right now. I think it's much more likely that would be an issue than it would be in Western Europe, although I know everybody thinks that that's where it would happen. I'm much more thinking that if a spark would erupt, it would be much more likely over there in the Asian area, because everybody's pretty much arming up as quickly as they can. And of course, you can pretty much walk between Taiwan and China on the backs of Russian, Chinese, and Taiwanese submarines. Just eventually, one of those guys is going to run into each other. Putin, everybody kind of ignores him over here, not willing to give him any reason to pick a fight. Maybe something happens, but it looks to me much more likely like something would happen between one of the various players out there, maybe Japan and China, Japan and Russia. They're all fighting over islands and everything. I just, what if we did see either problems in Europe and or Asia erupt militarily? Wouldn't the first thing that they would do is want to get into dollars outside of that area? Wouldn't that then start lighting the fuse on that $10 trillion implied short, where people would have to buy dollars to go back and pay a lot of these loans off that the Fed, at least for the last 2 years, probably shouldn't have had anything to do with? Should have been trying to get all that back as much as they could off the table. And, of course, like every time before, they can't do it. They just can't do it. Nobody like Paul Volcker anymore that is willing to let the country go through a couple of tough years to set us up for 20 good years. They can't stand 2 bad months, much less 2 bad years like the first, 1980 to 1982, maybe even 1983 before things really started turning around. But I do digress. And I'm going to win that award once again this year. So I think that takes care of my emails. Give me a call at 877-927-6648 as we get back to other stocks, most of them stinkers. PNRA out here today. Headed lower. Volume has picked up. Going to have more volume than any time back to the last time that you had big volume, which is the, July 26 with 1.75 million shares. You've got this thing. It's been acting like it's going to get back down to this spike low and gap that's about 185. I can't see anything changing that right now. Energy was decidedly stronger off this 224.15 high. Maybe you get a little bit of sideways action between now and Christmas. But I think if you were going to think about at all buying this, you would need to get 185 on it. Let's see. What else do we have going on here? Lulu, it's off $1, no big deal. MMM, Lockheed Martin, maybe they're forecasting a war. LMT, nice bounce in this stock. Wasn't exactly sure why everybody was so pessimistic on this company. A lot of people think that these guys do nothing but military stuff. They have been working for at least the last 3 or 4 years to diversify out of straight military stuff. Still going to be in stuff that they sell to other folks. I don't know when this stuff's going to start really hitting, but anywhere from water purification to energy generation, they've been working hard to start trying to make exciting stuff, again, for big government sales that are not interested in selling to us paupers, us little people. But nice beat out here, decent volume back up and through that 245 area, which was that last hump mid-September to late September out here before this thing came back down. I just don't see that much changing. I think a lot of the press is all over some of their jets that they say aren't performing. But I remember the last time I heard that the jets just didn't work. That was right before the Gulf War, and the F-117s went and cleaned house. Not a one of them got hit. Not a one of them anything happened. I think the press, a lot of them are probably a lot of LSD hippie kind from the 60s or 70s, and they hate all military stuff and more than willing to jump on anything that doesn't instantly work. Sometimes we throw a lot of money away on the military. I will agree with that. But on the most part, we're pretty good at making things that go boom. And that's what Lockheed is mostly doing now. But they are transitioning. So over the next few years, you may start seeing some other stuff that these guys are involved in. Some of the stuff would be life-changing. I mean, massively life-changing in the way of Apple if they ever get the stuff out the door. We will be back for the last segment. The last segment of the Power Trading Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what are we off? 7 points on the S&P cash. That's probably not as big a deal, other than, of course, this is going to probably give back everything that we got up yesterday. The big thing, I think, is that we are down. We're moving down, and the volume is already to the 315 level. So by 330, we'll easily beat the volume from yesterday. So that's going to be a little lighter volume up, and probably a little bit more volume down. Of course, this is the pattern of options rollover, so not too much surprise out here. You always either look for a push down and then a push up on the opposite day, or a push up and then a push down. And then you pretty much by Wednesday you get you get kind of the real direction of the market. So I'm not going to make too much about today, other than so many stocks that are lower and with just a couple that are higher. I am going to make a big deal about the volume, though, and that is seeing a lot of people come back into this. After the bell, of course, we're going to have Apple, and Apple will post lower sales numbers yet again. The profit may be higher, but they will have lower volume numbers than a year ago. So we'll see how the market reacts to it. I think a lot of people like the month or two that Samsung's going to be out of business. But we'll move along. Under Armour, down, and it is, of course, blowing away a volume. Another one with the that gets the losing horn for the day. And if you're seeing a theme out here, it is that. Not quite through the lows of January 20th, but very close, 6.7 million shares. We already have 51 million shares, saying that all of 2017 is going to be poor. I don't know if you can say anything more about that. Kind of a surprise, though. Wasn't a lot in the charts other than this thing going sideways. I think that they kind of surprised Wall Street on this one. And generally, surprises on Wall Street lead to new CEOs in the next 2 quarters. So we will see whether or not anything else happens on that. What else do we have? See, I wanted to look at see anything else. Oh, JetBlue before we have the end of the day. JBLU out here. This one spiked higher than the previous July 26th high of $18.94. Did so on 12 million shares. You needed 18 million shares. It's way back underneath of that. Many times what you call a blow-off in that parlance, and a very interesting chart pattern. I think that 1932 is true. I've checked a couple places. I'm hoping it's not a bag tick, but I'll check it tomorrow. Just very tough to see a market out here that has so many weak earnings numbers. And the market, for the most part, right now trying to shake it off. It will be a lot more harder in the coming days. I suspect we have a lot more like these, probably a lot fewer like Netflix and some other ones that caught a lot of bears sleeping and hibernating and riled them out of their cages. They are none too happy. But we'll see. Apple's probably going to be fine. But it's the rest of the market that I suspect we need to watch out for. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.
Hey, lump of sugar, you look kind of sweet. Truer than a a baby walking down the